a big deadline for a deal between the UAW and Detroit's Big Three. The deal nowhere in sight, with less than 15 hours until the deadline. AMH joins us from D.C. for more. Morning, Annmarie.
Good morning, Jonathan. And that's right. We do not have a deal just yet. And come 11:59 p.m. this evening, that contract ends. And what we heard from Shawn Fain yesterday, the head of the UAW, really in his clearest signal yet, saying that there will be strikes, and unprecedented at all three of these big auto companies, Stellantis, Ford, and GM. Just they're going to be targeting specific plants, Jonathan. This puts the president in a very difficult position. We have seen a number of labor issues come to him in the Oval Office. What the president likes to do is be out front with the rhetoric, supporting labor unions. He claims he's the most pro-union president in history. At the same time, behind the scenes, we do know that the president would like to stop a strike. This is usually how he's operated, whether it was the ports or the freight railroad unions, Jonathan. We do know that a number of individuals in the White House are tasked to deal with this. Gene Sperling is the liaison. We know that Julie Su, the acting labor secretary, is monitoring it. And we heard from Jared Bernstein yesterday, his chief economist. He said they are encouraging everyone to stay at the table. Jonathan, as a president, it's not just an issue for today. This could potentially mean the president losing blue-collar workers that could vote for him next November.
Big story for us today, tonight, and tomorrow. AMH in Washington, thank you. This is what's on the table right now. UAW, big union, wants a 36% raise. This is the offer, according to President Fain. Ford proposed 20% raises over 4 years. GM offered 18%. Stellantis, 17.5%. Winnie, a question that's dominated this program now for the best part of 2 weeks. Do you see this as the dying embers of a hot labor market, or something we've got to live with for the next few years?
Well, I think that there are definitely a lot of real problems in terms of labor supply that are probably going to keep labor markets tighter for longer than a lot of people anticipated heading into the pandemic and the kind of erosion in participation. Now, that being said, recent economic data and recent payrolls data have actually shown some upticks in terms of labor participation. So I'm not necessarily convinced that this is kind of the dying embers of a hot labor market, but I do think that we are starting to reach an inflection point that should put the labor market into a little bit more of a balanced state.